Hello, everybody, and welcome. I'm Bonnie Halper. I write the weekly Startup One Stop newsletter and work with entrepreneurs, helping them with their pitch decks, because none of you know how to properly write a pitch deck. So if you need help, reach out to me. It's hello@startuponestop.com. And every 2 weeks, we host a breakfast, or now I call it Investor Insights. It's not breakfast anymore, although you're all welcome to have breakfast anytime you want, even now. With one investor and a small self-selecting group of entrepreneurs. And we want to thank Joseph for hosting us. Joseph, you want to tell us a bit about what you do?
Sure thing. Great to be here, everyone. Thanks for joining. I've been working now with Bonnie. I guess it's almost 3.5 years or so. I am a startup marketing guy, so I help early stage companies go from unknown to well-known. I've done a lot of work in the ed tech, FinTech, InsurTech, age tech, HR tech, a number of other areas, putting in marketing programs, strategies that help companies grow and go from that early stage to scale ups over time. So thanks all for joining, and looking forward to today's conversation.
And we're so happy to have Cris back again. I never know why he's missing the H in Cris, and I never asked him about that. But Cris also used to co-mod our clubhouse rooms and gave amazing advice every single time. So Cris, do you want to introduce yourself and tell us what you're looking at now?
Yeah, absolutely. And thanks, Joseph, and thanks, Bonnie. The backstory on the no H is my mom is Norwegian. So in Norway, they typically spell Kristoffer without an H. So that's the significance of that.
Thank you.
Yeah, absolutely. And so my background is I grew up in consulting and then eventually into consumer packaged goods. Where I worked around the world for big corporations, then jumped into lower market, private equity, family business, reporting oversight board, did that for 5, 6, 7 years, and then off to VC land, where I helped run a supply chain AI company. And then 2 years ago, stepped away and have embarked on some angel investing, as well as I'm an LP in a couple of VCs, and also have a consulting business as well as a startup business as well. So trying to keep myself busy, I'm sure as all you guys are as well. And it's fun. I enjoy what I do and love having conversations like this, especially with Bonnie and Joseph.
Sorry, I have this terrible cold, so if I mute, I apologize for that. So let's have everybody introduce themselves. Carrie, you're first on my list here.
Hey, I'm Kerry Fox. I'm a executive producer of intellectual properties. I came up through the marketing and advertising world. I was a writer, creative director for a long time, and then segued into entertainment. And I just started coming to Bonnie's little morning soirees to really gather information and just learn more about, the other side of creative, which I think is kind of essential. And I'm currently working on a stack of programs around David Bowie IP, and considering taking it out to investors if it makes sense that way.
Okay, we try to keep them short, but thank you. The introductions. Leslie.
Yeah, good morning, everybody. So I'll keep it short. I'm a therapist. I have a company, Transformation Games, that develops and launches healing, restorative communication games, prison reentry, inclusion, veteran reintegration, all kind of stuff. So I have 8 games on the market, and my newest one that I'm very excited about is Remembrance. I don't know. I'm rushing here. It's Remembrance, and it's to help people heal from grief and loss together with their families and their friends. Obviously, there's a huge need for it. So super excited about it. And thank you, everybody, for being here.
Oh, thank you. Alexandra.
Hi, I'm also full of a cold, so hence my camera's off. But just really quick background. I've spent nearly a decade in CPG, and I'm launching a company called Pistachio, which connects consumer brands with content creators to produce assets for social media and e-com. We're about to start fundraising imminently, so happy to be here. Thanks.
And welcome. Ian.
Hi, everybody. So Ian Garmez in Toronto. I'm the Canadian rep for Virtual Film School, which trains influencers on how to create great videos. And we have a team of film industry pros doing that live. And yeah, things are going well for us now.
We're always happy to hear that. Joseph. And Joseph is an investor who spoke about a month ago at our
Hey guys, yeah, I'm an entrepreneur investor. I invest in real estate, early stage tech, and renewable infrastructure impact investments.
Oh, thank you. Rachel. Oh, you're muted.
Sorry. Hi, my name is Rachel. I work at Zero Line Studios. That's my studio, and I'm a graphic designer who works in high tech and low tech. So I work with food tech and other high tech businesses, but also with trades.
And welcome back. Tom, always good to see you too.
Thank you. Good morning. Hi, Tom Kroch. I'm a data scientist. I am a co-founder of the company in the insurtech business. And after we were acquired last year, I'm now leading innovation of data science and generative AI at a large insurtech vendor.
And Yoni.
Hi guys, first time. Thanks to Joe for inviting me. I'm an investor and a founder. I've spent my career basically as a COO for the last 15 years. Raised about 250 million with an IPO and an uplist to the OTC, and I'm an LP in 2 funds and an angel in about 10 different companies.
Oh, what do you invest in since you're here?
I generally sidecar with Florida funders in SaaS, do a little alternative stuff on the side, off-Broadway show and stuff like that, but primarily in SaaS.
Oh, okay. Did you say a Florida funder? Yeah, Cris happens to be in Florida at the moment.
So I'm in New York at the moment, but I'm my wife and I are moving down to Florida, which is where I grew up.
Oh, okay.
I was going to say, Yoni, one of the companies I advised for and invested in is your Florida funders is invested in them, so there's some overlap there for sure.
Yeah, which one?
Gemini Analytics.
I didn't go in on that one. I went on a Better and a couple others, but yeah.
Investor speak. So, anybody have any questions? Anybody want to kick it off? Ian always has a question.
I'm not primed yet. I haven't had a chance to read Chris's bio yet, so
Oh, okay. So
I'll wait to hear a little bit.
Okay, Cris, tell us more about yourself then. What are you looking at these days?
Yeah, for sure. So, one of the big things that, so to give a little more context, like, first off, thanks for giving all the backgrounds. I think there's some overlap with some of the folks here on the call, so it'd be great to hear about any questions that are pertinent to your backgrounds and experiences and where you spend your time. I get to see this from a different angle, from numerous angles, I would say. One is an operator, 2 as a startup founder, 3 as an LP in a couple of VCs, 4 as an individual investor, and 5 as an investor in like more of a investment group. And the things that I always look for in potential investments is always, 1, the person or the founding team. Without that, I don't really care about the idea or the traction. Like, we're going to be paying you to learn stuff for the first time, or if it's your second go around, like, even better. I'd love to hear more about the failures and ups and downs you had. But the other thing is important for me is when I'm having a say in part of the diligence or any of the stuff that we're working with the team on, or the broader team, is just providing value. If we can't provide value, or I can't provide value, typically it's not something that would interest me in learning more about the company or sector. Other important factors for me are if there is an SPV or something that's being introduced from one of the VCs that I'm part of, they've obviously done their diligence and allocated that. So I won't ask too many questions, but I will take the assurance of their team that have done the work and diligence and have the momentum that they even have access to an SPV. So I'll always tag along on the ones that I feel are most relevant or pertinent. And then the investment groups where that I'm part of, we're very much focused on CPG, as well as on both sides of the business model. So that could be the product side of a company who's actually manufacturing, procuring, building finished good and selling it to wholesale, retail, or D2C, as well as anything that is tech related in the space that can fit into a lot of the areas that there's old and archaic ways of running a business that can help automate or allow a little more efficiency to it. You're on mute, Bonnie.
I know, I'm so sorry. Is there a typical check size, or and do you do follow-on investing ordinarily?
So the check size that I'll be writing individually or collectively is on the low end, so between 5 and 25. If there are bigger opportunities, that'll be more of an aggregated view. It's as you know, the earlier stage investments are a big risk. You're essentially gambling. VCs who are able to get 1 out of 50 correctly can go raise another fund. So that's 2%. That's not that great, but it is great. So if they can get 2 out of 50, they're doing a hell of a job. So when you're an angel investor or writing checks there, your check size or the quantity of checks that you're sending out typically are not going to match what a VC sends. So you're risking even a higher amount of your money that ultimately you're gambling with and investing with someone individually who's running a business.
But since you are also an LP in some funds, would you ever make introductions? I'm sure you do make introductions there as well when you feel that it's appropriate.
Yeah, look, that's the beautiful part of being part of a VC, an earlier stage fund or whatever fund that they're focused on in their thesis, is they've done the diligence, they've seen the traction, and then you have access to those SPVs that you can hopefully have a higher chance of upside and a return on your investment.
Thank you. Questions, comments?
I have a question for Cris. Do you think there are some overhyped sectors right now that you would identify in venture investing?
Yeah, I mean, I think, look, the tidal waves that have happened 15, 20 years ago were very much in ad tech and FinTech. So when you look at North America, as far as those sectors, those are very mature right now. So they've gone through their cycles as a company to either know that they've been acquired, gone public, or dissolved. And there's more add-ons to the infrastructure and architecture that has been built, but they aren't big ideas or there's enough revenue or money raised to compete with what's been built, because that foundation is now in place. So both, I think, FinTech and ad tech is where I would say, based on my experience and knowledge, and I can't think of anything else off the top of my head there.
Okay, thank you.
Well, the gold rush at the moment seems to be generative AI.
For sure. I mean, I wouldn't say that's overhyped. I mean, you're just starting to see Chat GPT build out a lot of their integrations that everyone's tagging along on. And that's going to get super interesting as the traditional integration play kicks in. So how that gets disseminated out to other add-ons and what that looks like, you already see all the big search engines incorporating this into their search and trying to differentiate between what they've historically done on their algorithms and models they've built and also the advertising infrastructure that's built into that. So that's something to watch, and that's something where there's a lot of money being pushed into those directions.
A lot.
Yeah.
Yeah, I'm personally concerned about the speed of adoption with AI.
Yep.
That thing never sleeps.
Yeah, but I'd also say, look, AI to a certain point is commoditized, right? So, using a lot of the models that are out there, there's not another way that you can write a time series regression model. Like they're all standard out there. You can tap into those. You don't have to hire a data scientist to do that. There's platforms like Data Robot or H2O.ai that you can tap into and utilize those just by setting up an integration or using their platform to tap into what you can do for a potential customer. A lot of manufacturers and brands have data scientists on their team to just do that, or to write more feature-based algorithms to sit on top of the AI that's sitting there to automate or predict what would be there. But as it pertains to different types of AI in language processing, yeah, that is, I think there's a huge opportunity for that. The times that I've tried Chat GPT, I'm not a good writer, but all of a sudden by typing in 2 or 3 sentences to Chat GPT, I'm like, this could be a career for me.
I was going to say, first, for those of us who are writers, we see the flaws of it too. But if you haven't been writing for your entire life, it's different. It's like, oh, it's magic. Just like at the dawn of the age of social, I said this is going to quickly devolve into the age of surveillance, and I was right, and everybody thought I was being paranoid. So I'm still extremely wary of this technology, because if it's scraping the internet, it's scraping your computer too. Let's be honest.
Don't forget your phone. In the AI space, Chris, where do you think the winners are going to be? There's lots of tools popping up. I get an email every day with 10 new tools, right? So where's the winners? Where are the winners going to be in this space?
I think I think everywhere. I think if you haven't embraced that and you're a fairly mature business, there's a lot of efficiency and that you can drop through your P&L in finding processes. And if the data is clean, there's huge upside. So I think across the board, just in general, other areas that haven't touched it as much are anything that hasn't embraced technology yet. So the ones that I see more upside, obviously in consumer packaged goods, there's still archaic behavior going on, like where if the data is clean and brands are using the right ERP or IMS or have moved their data to a data lake that can get cut and set up different ways and used into these new models that are being built, I think, those industries that are behind the tidal wave that happened 10 years ago, those are areas that I think there's a lot of upside for just in efficiency as you go through that. So product-driven business models, where there's a movement of goods or movement of physical goods, that is an area that I'd say there's a lot more upside. Anything that's service-based, I think is ahead of the curve, that can sit in that AI is already influenced to a high degree.
How much of a dependence on proprietary models like OpenAI models is acceptable for you as an investor when someone is pitching a product?
I don't. So it's a good question. I think 5 years ago, everyone had a domain that said .ai, right? Mm-hmm. Or was like, here's our brand name and let's throw AI next to it. Mm-hmm. And now you don't want to do that. It's a secondary benefit. It should be something behind the scenes that complements what you're primarily focused on. So throwing the AI in there comes back to what I believe what is where AI is as far as being a commodity today. But it is important to know that if you are focused on technology and you're leveraging existing data that you're generating for your company or utilizing from other companies or taking from public domain, scraping it, it is important that that's part of your consideration and how you're building a business. It's hard to get to a point if you don't have funding and or revenue and or positive cash flow to justify the expense of investing in it. That's a different conversation. But for someone who's starting a new business and in the areas that I'm aware of and I have experience in, it's something that should be considered just because there's efficiency there. It's AI is scalability. AI is a cleaner P&L, higher margins. So there's also a big investment to get to that point to realize it. So it's kind of the cart and the horse.
Okay, on another topic, I mean, we've just been through a banking crisis. Are there any ongoing effects of that crisis on VC?
Yeah.
Okay, could you give us a little insight?
Yeah, for sure. So, I mean, to give you a sense in general, I don't think it was even the banking crisis. I think it was everything last summer. So the two funds I'm involved in, I haven't had a capital call in 9 months. Like that's fairly significant. Usually it's every 2 months that I'm getting a capital call on my allocation, and I haven't had a capital call in 9 months. So that is, I think, significant not only to where the market went last year, like early summer, midsummer, but also to where the market is today and the trickle down effect that the banking crisis will. And I don't know if it's a crisis because the government has stepped in to sit where it is, but this blip or whatever it is indicative of what happened last summer. And I think the interest rates rising and a lot of the decisions that were made by these banks to go out and get growth, now they're coming back and saying, oh, maybe that wasn't the best decision. So that trickle down effect is going to impact where money goes. Where startups need to be more considerate of their use of proceeds and their burn. And I don't think we've seen the start of that part yet. So they're trying to floodgate and dam the banks right now to give confidence to the market. But I think over the next few months and towards the end of this year, you're going to see that trickle down effect to the companies that were relying on these banks.
And are you advising your portfolio companies to restrict their expenditures?
I've been saying that for 6 to 9 months since I felt it just from where I sit. So being more cautious and more diligent as a first-time founder, or if you have an operator jumping in the business who knows the ins and outs and their debits and credits, like, yeah, you should be tightening those belts. You should have already been tightening those belts, and now even more. Just to know where the market's going. If I'm not getting a capital call from two funds that I'm in, and they're only making investments in their existing companies, like that's what I'm hearing across the board from not only what I'm experiencing, but from other LPs and folks as well.
Chris, is the absence of capital calls, are we saying that they're sitting on capital and dry powder and not deploying?
I think they're more cautious, from what I've been told in discussions I've had, of where they put their capital to new companies, new investments, and they're digging in deeper with their existing investments. So the ones where they see potential or momentum and those metrics that they've kind of outlined for them to hit, that's where I see VC's money going in deeper. And not as many SP. I haven't seen an SPV in 9 months. So, it's not only the capital call, but any of those opportunities on that point that everyone has to take a step back and say, all right, where's the market? What do we want to deploy? The VC's going, we don't want to make these investments right now because is a company overvalued where if we wait this out 3 to 6 months, we can get that much more value for our money putting it in the company. But also testing the team to see if they can actually grow the business in a trying time, which is indicative of the founders and the people who are running the company that they've been able to achieve investment from them so far.
Have you seen any signs of a return to some form of normalcy?
From where I sit, no. Then again, I'm also heads down in the stuff that I'm working on, so I'm not as aware as I was last year with what's going on in the market. The companies I advise for, we talk once a month, once in a quarter. And then, the conversations I have with other LPs or the funds or folks associated in this space is more in social settings than anything else. So I haven't felt it, but I think private equity is salivating right now and waiting for the next 3 to 6 months to kind of play out, because that's when they'll scoop in, and typically in down times is when they do best.
Yep.
Got it. Appreciate it.
It's usually in down times like this that the best or the most successful companies rise. Are you not seeing that? I just wanted to mention that I'm working with a founder who, we put our pitch deck together and we started raising 2 weeks ago. And it's a small round, it's 250, but it's nearly closed. And I was really surprised. I mean,
as we deal with changing climate conditions, why is
Sorry,
sustainability important in the food industry?
Bonnie, was that from VC sources or other kinds of sources that funding was obtained? Sorry, I seem to be muted.
No, you're not.
You're good. Bonnie's muted. Bonnie, you're muted.
Bonnie, you're
Yeah,
muted.
I'm sorry,
Bonnie, you're right.
I'm
Oh
sorry.
yeah,
I was having a technical issue. What was the question, Ian? I apologize.
the question was, what was the source of those funds? Was it VC or other kinds of investors?
Angels. All angels.
Okay. All right. Of course. Small.
It's just early stage. It's
Got it.
seed round. All angels.
Right. Gotcha. Thanks.
So Chris, I'm curious, what gaming are you involved with?
So there's one company, they're a FinTech focus, and what they do is they play loyalty rewards for gamers, and then verticalize that on credit card, debit card offerings, and play that piece. So they're Miami based and they have good momentum right now. But it is very much a FinTech play, aligning with some of the banks, getting that credit from them. And they're in a good spot right now from the updates that I get. But obviously I think they've raised maybe 3.5 to 4.5. And they have some good momentum, but they pulled back on their use of proceeds and building out teams, et cetera, just to make sure that they can build a little more efficiently and not have to go out and be forced to raise in the market right now.
Thanks.
Chris, I had this question actually, Yoni or Joseph can answer as well. I was at an event the other day focused on retirement technology, and there was a VC panel. 3 of the VCs were very doom and gloom, sort of what you just painted a picture of, Chris. But one was very optimistic, sort of a comment about the PE firms. So every market, there's winners and losers. Who do you think is going to win in this market?
I'll step back and let Yoni or Joseph jump in on this one to start.
Who are we defining as the competitors in this market?
I'm saying in the general startup space right now, there's going to be some winners, is it industry or is it, stage a company type of founders? I'm just kind of curious.
Meaning from the venture side, the sell side, not the VC side, you mean?
Yeah, someone's going to make money in this market, right?
Yeah. So I've seen a massive transition over the last probably 8 months, 6 months since the NFT craze died down, with a focus more towards utility in the VC space. So I think a lot of people had a bad taste in their mouths from the Adam Newman raise, 360 million basically, and on carbon credits and things that haven't yet been I guess, validated to an extent that would justify that kind of capital. And so between that, NFTs, and a lot of other things that have been going on, a lot to do with the IPOs that we saw 2-3 years ago that were severely unprofitable, and we're still rocket ships on the market until a few weeks after their IPOs. All of that has been driving people towards more utility, things that are more useful to the world, at least today, in the next 5 to 10, maybe 15 years. Seeing a lot of obviously flyers on things like eVTOLs. Generative AI is in the middle of that, right? So generative AI is the buzzword right now. I think that's gonna have massive implications, but not for a while. And so that's kind of in between. But it's still utilitarian. So that's what I'm seeing personally.
I'll jump in. I would say that the companies that can get their OpEx down or revenues to cash flow break even control their own fate. Everybody else is subject to financing, and again, you're subject to market conditions and venture capitalists.
I think, Joe, and tell me if you agree with this, I think that's a derivative of the overall purpose that the venture has in the world. So meaning, if you're going to come up with, let's say, take CrowdStrike being a perfect example of probably good economics, right? They IPO'd, they did fantastic. They have a utility in this world. They do really well. Whereas we're not going to see an NFT IPO anytime soon. And IPOs are obviously going big time towards profitability and less about buzz and hype. And so I think the concept of cutting down OpEx, obviously, and not wasting money constantly, is a derivative of ultimately of an overall strategy, more geared towards the usefulness of it. Would you agree with that? Or are you thinking that something along the lines of an NFT or NFT venture might actually be able to get to profitability within a reasonable period of time?
Yeah, I mean, look, look, there's many layers when you're talking about NFT. I think, NFT art is in the shitter right now, but, there are many use cases for putting on chain as a non-fungible or fungible token, things like music, art. And when I say art, I mean, I'm not talking about a Bored Yacht 8 Club. I'm talking about the Mona Lisa, Rembrandt, things like that have real value.
Yeah, I could see that happening. Cool.
Along your statement about like utility, etc., I am from time to time approached by people who try to start businesses in the healthcare domain, which has like a very high utility. They're all trying to solve like a real pain, but it's also like very hard to do that. For example, like someone approached me trying to build an app to predict like reproductive age in women, an important task, but like a very difficult one to do. In this balance that we have now, that's not like that, like more like quick wins are fading. What is the best approach for such like very useful yet very difficult ventures to raise money?
What is the question?
Oh, go ahead. Go ahead.
No, I wasn't understanding. I mean, you're asking if you have a very difficult investment to raise for?
What industries are tough to raise for?
Yeah, a product that is very useful, but the road there is just very difficult. Like it involves like medical regulations, things like that. If you do get like FDA approval, then of course like it's very useful. You will have customers, but getting there it's very long and risky.
Yeah, in general, I'm not a biotech investor. I have like two, but I don't like biotech, not because you can't make money. I just not smart enough to figure it out. And you layer on regulatory risk like FDA, EPA, all that stuff on top of your venture risk. So I don't need to take that kind of risk.
Yeah, Tom, I'll jump in also. I'll say that I spent the IPO that I mentioned before was with a biotech company that we raised a good sum of money for. So biotech is anything life sciences is an obvious one. Insurance is a big one, just because of the antiquated systems. It takes a very, very long time for, combine antiquated systems with and antiquated mindsets with with long enterprise sales cycles in the insurance world. A lot of people don't like investing in there. And so if you happen to be in the insurance world, a good route to go is through the insurance VCs, CVCs. WR Berkeley has one. They all have CVCs. So that's another. I've been noticing, unfortunately for me, because my venture is in the small business space. Small businesses are a big no-no in the VC institutional world. Despite the successes of Square, Stripe, HubSpot, MailChimp, QuickBooks Online, so on and so forth, Xero, and ventures like those that are saving the small business world. There's still a big hesitation around investing in the space because of the short-term LTVs. They just figure these small businesses are going to die within 2 years, and so it's not worth investing in the software that's going to help them last longer, which I'm adamantly against, or I think the opposite.
Okay, makes sense.
Yeah,
Yeah,
there's another difficult sector.
Yeah,
I just wanted to highlight, which that several commentators have talked about deficiencies in American manufacturing of military equipment, and there's like huge backlog, like 5 years in battlefield missile production, and this has been connected with the removal of small firms and sort of concentration on large firms by American military establishment. But do you think there's an opportunity for VC to help in this area, which seems to be a pressing need?
I think so. I think, look, small business still makes 70 or 80% of the GDP. I think that they're inherently more risky, but we need more tools to make small business, to reinvigorate the manufacturing and industrial base here in the United States as we pull back from overseas. I think that's a smart move. It's going to take time, but I'm still a big believer overall in a portfolio of small businesses, but taking any 1 or 10 is kind of dangerous. You need to be like a HubSpot or an infrastructure provider where you have thousands and thousands of small business and you just expect a higher churn on those businesses, but there's always new businesses being started.
Yeah, I'll echo that also, Ian. If you think about it in terms of a small business that supports anything military related, needs to go through the most arduous process of bidding on that whatever they call it, contract, auction, whatever it might be. And so if you're going to invest in that company based on hopefully not just one egg in the basket of the military, but if you are, then you're risking a lot of bureaucratic risk. Because actually, if they get through the process, there's a pretty good chance they'll get that contract. Because the military is pretty, for lack of better terms, haphazard about awarding those contracts to smaller businesses. But it's getting through that process is just hell.
Yeah,
it's just it's like getting through FDA, right? It's like, I mean, FDA is a little more validated, or a lot more validated, I should say. And costs a lot more, but SAM.gov just wants you to have to jump through hoops to get to them.
Yeah, there is a SBIR, which is the Small Business Innovation and Research program, which is the DoD allocates 3% of their entire budget across all branches. So if you can get non-dilutive funding through that, I think, and also if you have, listen, every government entity has a minority and women's minorities initiative. So if a founder qualifies for that, then certainly I think there's an ARB there.
Ian, are you asking out of genuine interest in investing in the space, just out of curiosity?
No,
I was going to say,
I follow the developments there, and but I'm very curious about the importance of government spending to provide funding for various projects. I mean, in our company, we're currently looking at foundations and government funding both in the US and Canada, which has increased dramatically in some areas. So that's part of why I'm asking.
So I'm in touch with 2 VCs, one of which focuses in general on ventures that need help in the federal government, and another one that's more specifically focused on those who need help with the DoD. So if there was any serious interest, I'm happy to make introductions.
Okay, well, I'll connect with you. Perhaps, never know.
You got it.
Bonnie, what was it? The last one or two meetings ago, we had someone who spoke all about government funding.
Yeah.
Yes, that was Trevor.
Yeah, we had some.
Yeah, speaking of the military.
Great talk.
Yeah. Speaking of the military and them looking for more companies, they're even approaching the tech giants to get more involved with building for the military. You saw that, yeah. So founders, you're looking for your next opportunity. Tom, I know you're looking around. So There you go. And thank
Yeah,
you for the
no.
link, Joseph.
I have to hop off in a few minutes, unfortunately, but I just wanted to ask those of you who are investors in early stage companies, what you're seeing valuation multiple wise and caps in the market at the moment, given the current climate.
All down. It depends what stage. I think late stage took the biggest haircut. I know some late stage like CDE were down 50-60% valuation from the last mark. Earlier stage tends to take less of a hit just because we're talking smaller dollar amounts. It's just earlier, but everything's in depending on what stage, what sector.
Yeah, I suppose if I'm selfishly talking about me, first raise, angels, pre-seed, institutional capital, we've got a bit of traction.
What
Any
vertical?
B2B SaaS, any benchmarks would be really helpful.
I'd have to understand more about the business before I could comment on it.
Yeah, no worries. Yeah.
So, I also wanted to mention that since Chris is an operator, if you guys have any specific questions about your startup or need some help, he's the guy to talk. He's the guy to ask. Seriously. No, I know this because, like I said, he used to come on our clubhouse rooms every week. It was fantastic. So feel free.
What was it? You mentioned the clubhouse. What was that?
Oh, we used to have a startup clubhouse room. We stopped those. I don't know why.
This is Clubhouse, the app, not an in-person type of thing.
Oh no, it was the app. Maybe maybe we should start them on LinkedIn. They were fun.
Well, let's talk for a second where Clubhouse is today.
Yeah, where is Clubhouse? I switched phones and the
It's still there.
Still there. Clubhouse and Lunch Club also.
Oh, I like Lunch. In fact, I was just telling a friend who talked me into going back on Lunch Club that I had the best Lunch Club meeting ever yesterday. You just never know. It's the luck of the draw. It was fantastic.
And I think with
No, go ahead.
Clubhouse had a lot of problems with their app. I mean, personally, I was never able to use it properly, and I don't know exactly why, but I love Lunch Club. Lunch Club is great.
Yeah, Lunch Club was great. Also Upstream and Twitter store. What was it? Twitter Rooms, right? Which have since been shut down, but a lot of that has just kind of fizzled away.
Yeah. Yeah, Lunch Club, I'm a big fan. Do you guys all know Lunch Club, right, founders? And we know Joseph is. Are you on Lunch Club at all, Chris?
No,
No, too busy.
I haven't been on any of the clubs lately.
Yeah. I've just been doing Lunch Club. Like I said, my new phone, it's really bad at telling me when the rooms I want to attend are open, actually, which is too bad because some of them I really enjoyed.
There's been I'll tell you that I tried Clubhouse, I tried the Twitter one, I tried Lunch Club. I enjoyed. It's almost like I felt like I developed some decent connections there, but there was a feeling of a lack of focus in on what it is that I actually needed, right? So everybody comes there, arrives at Lunch Club with a need of some kind, whether it's specific or broad. Whereas there's been a major rise in calls like this throughout the pandemic kind of changed world right now, that I have connected with way better than the likes of Lunch Club or Clubhouse or those. So like I have 3 or 4 of these types of calls on my calendar every single week, and then I'll hop in when I have a chance, and I'll pass when I don't. But ultimately I end up meeting amazing people on these. And I think it just I don't know if it's, you start with a broader pool of people and you can kind of identify who you want to talk to in the process of the short intros. Whereas at Lunch Club, you're kind of, for lack of a better way of saying it, married to that one person you're going to speak to that week. And God knows what will come of it.
That's true.
Yeah.
It is pretty much the luck of the draw.
Yeah, exactly. Nailed it, right? It's a roulette. It's a game of roulette with Lunch Club.
I'll just mention last week I met one of the SBF prosecutors, New York Southern District, on Lunch Club. That was quite a conversation. He lives in Florida, but he's in involved with the New York
He
Southern
had
District.
time for a lunch club.
Yeah, I was a little surprised, but he's not on LinkedIn for obvious reasons. So according to him, they don't want him on LinkedIn.
That must have
But
been,
anyway, it was an interesting call.
oh, I'm sure. So next question or comment?
How much
Well,
should
I'm interested in trends. So Chris, you've already indicated that you think we're in a bit of a downturn right now. I mean, and capital deployment in VC is significantly reduced. But like, I know somebody asked you this before, but when do you see us sort of really coming out of it?
I mean, I wish I knew that answer. But I think, look, right now there's a downturn. There's a lot of uncertainty. How that plays out, I think it just depends on where you're focused and where there's upside. A basic example is everyone shifted out of equity into fixed income. Like, where are they putting their cash? More in CDs. Like, that's just in the personal business side. Like, sweep accounts are now being utilized to like the highest degree in I can't remember how long. So getting out of this time frame, if I'm guessing, and I'm not a good guesser, I would probably give us another 9 to 15 months where there'll be a solidification of where this sits and how the market kind of normalizes. In supply chain world, one side of the import equation is normalized, and it's actually, you're seeing inventories in the US come down significantly, and consumption only drop a little. So everyone's pulled back to make their balance sheets a little more attractive, but now you're not seeing brands on the shelf as much as you saw before because they're trying to be more conservative with their working capital. So you got a lot of the balancing act and figuring out how to get back to whatever normal was is a big open question.
Right. Yeah.
So since we have 3 investors in the room, and there was a huge focus on Web3 and NFTs and everything along, but it's all shifted. A lot of the attention is shifted to, of course, generative AI. Where are we with Web3 right now? I know that there are investors still investing in infrastructure, so I'm sure it's going to rear its head again, but any comments on that?
I would say Web3 is similar to Web 1 in 2000 or in 2001, post-crash rebuilding.
Okay.
I'll add also, just because I happened to take part in a roundtable around this exact discussion, this same topic last night. And this brings it back to something that Joe said earlier, was that in terms of when we were talking about NFTs and the utility of that kind of stuff, someone had mentioned yesterday that, take Roblox as an example, which is making use of blockchain technology. De Beers launched a very specific advertisement within a world of whatever kind within Roblox. They didn't do it anywhere else. It was an exclusive ad within a metaverse app within Roblox. And the person who mentioned this last night gave it as an example as how brands, whether startup or large enterprise, could leverage blockchain or Web3 in a variety of ways without necessarily developing themselves, where they could, get to the new generation of internet surfers, of web surfers, where they are right now, right? So like, think about all the kids that are in Roblox, and Roblox, their success is undeniable. That would be a perfect way to incorporate some form of Web3 within a marketing strategy.
With regard, somebody had a question about timing. I mean, it's very difficult. If anybody could predict timing, we'd all be rich, billionaires. But I would say, there's a lot of different asset classes. I think real estate has some fundamental problems with rates going up. And since it's the largest asset class, it tends to affect a lot of things. Obviously, the stock market is down, and in general, alternatives, the valuations have come down. So, until I think, the governments start either printing a lot more cash or reducing the rates so that cash becomes plentiful again, I think we'll see a general contraction in the economy.
Thank you. Next question.
So how would, I know about a year ago, there was a real rush for investing in mental health solutions. That seems to have tapered off. Can you speak a little bit on any kind of hunger now for mental health solution investments among investors?
I mean, I personally don't know the space, so I wouldn't want to give you an opinion that I don't have that much background or experience on.
Yeah, I'm not really invested in that space as well.
I'll just say that while I'm not invested in the space, I have observed a good deal of investment in the space. We get a lot of round closing updates in a variety of newsletters that have indicated that the mental health space is doing pretty well right now in terms of investing. Obviously, coming off of a high stress time over the last few years,
And still are in a high stress time. Be told you, it's funny. I was just seeing this article today about how Gen Z are now investing in dumb phones. They don't want smartphones anymore. They want to keep it. They don't want to be bothered. Did anybody else see that? I thought that was interesting.
What are they investing in, Bonnie?
In dumb phones. They don't want to be as connected as they do. They don't want all their information scraped everywhere at every.
I love that.
Yep, you saw that.
Give me an old school like
Yep.
Razor flip phone. I'll be a happy guy.
I held on to my flip phone until it died.
No, I'll send you the article because there are manufacturers making dumb phones and they're doing extremely well right now.
Love that.
It's like the phones for older adults that you have like 3 buttons. You know, you don't have to know any.
Yeah, let me find it. I'll post it in the chat. I'll post the article. So give me a minute. I mean, carry on. I'll find it.
Chris, any thoughts on ed tech? Maybe not one of your sectors, but
No, not one of my sectors, but I do have some peer groups that I'm in where I've learned a lot about ed tech. And I think it's one of those areas that fall into more behind the curve where there's a lot of opportunity. A lot of the plays that were done for FinTech, ad tech 20 years ago, you're seeing that happen over the last 5 years for ed tech. So there's a lot of upside from what I've learned. Also at the same time, there's a lot of scrutiny on the space and the sensitivity to how kids or adults are being educated and where to focus that knowledge and how to disseminate that information and teach the kids. I think there's some disruption happen there as well.
I'll
I
just
agree with you
share-
on the long tail. Yeah, that's good.
I'll just share a thought on ed tech because I worked in that space for a while, and historically, educational based businesses did well during bad economies because people would go back to school and upskill or whatnot. I don't know if that's true in today's economy because you could do so much without actually going to school. But those businesses don't have normally the same sort of hockey stick growth that you see in some other tech businesses. It's a little bit of a slower burn to grow. But I love that sector. You know, great businesses. You know, you're doing a good. Those companies are usually doing good for other people, so it's a good industry to work in.
I have a couple.
I just real quick, sorry to hijack. I got to hop to my next call. Really appreciate this guy, Joe. Thank you so much for the invite. A blast. Really just a pleasure speaking to all of you.
Thanks for coming, Yoni.
Yeah, absolutely. Chris, I'll be down in South Florida in about a month in case you want to get together.
Yeah.
Yeah, I'll introduce you to. I'll do an email introduction.
Perfect. All right,
Okay.
guys. Thank you so much. Take care.
Thanks.
Thanks.
I'll just make a comment on the ed tech. It depends on who you're selling to. If you're selling to private institutions like colleges or for profit, I think it's an easier sell than government, quasi-government entities where you've got administrators who've been there for 30 years and they have no incentive to take risk, right? A school superintendent is going to get paid the same, to manage 30,000 kids. And if he takes risk and it blows up, then he loses his job. So there's very little innovation and the sales cycle is once a year. If you miss that sales cycle, you got to wait another year. So of all the verticals, I think, outside of biotech, I think ed tech is extremely challenging. Just depends on how you're selling and what your audience is.
Makes
At a nature.
I mean, we're having some success pitching in maybe traditional ways. We're not pitching to schools, we're pitching to other parties, and we're getting some progress there.
Yeah,
You know,
that would be the recommender route.
we seem to be living in a totally thinking outside of the box world. A friend of mine had this company, and it's an actual product, and she was having a hard time. And it allows for privacy in public places and blah blah blah. Now all of a sudden, all the schools in New York City want this thing. Out of the blue, she's like, her business just completely took off. You have to start thinking outside of the box. I guess we live in that kind of world. So, next question or comment, or anybody want to pick Chris's or Joe's brain? Like I said, they're fantastic when it comes to start. I mean, they worked in companies. Chris has started a number of companies, several companies, has another one right now. Here's your chance.
Chris, anything about your company? I know it's still in mode probably, but can you give us some idea of what it's about?
Yeah, for sure.
I didn't know if you want to do that or not. Go ahead.
Yeah, no problem. So yeah, we're still in stealth mode. So, but what we're focused on is monetizing the referral moment. So Ian, I'm sure you get asked this, everyone on the call gets asked this, hey, do you know anyone who does X, Y, and Z? So that moment we monetize specifically for supply chain for individuals. So anything in movement of goods or anyone that you know on that front, we've bounded our vendor partners, which are 20 plus now, in end-to-end supply chain contractually, that upon a successful introduction, they would provide commission dollars for anywhere from 3 to 5 years for those deals successfully introduced. And these are supply chain companies that are warehousing, third-party warehousing, import containers, customs clearance, procurement of raw materials, components, finished goods, small parcel, financing. So what we're doing there is very much allowing for companies to come in to the marketplace. So when we appeal to brands, we provide free services and RFPs to them, and we can now not have to charge $15,000 to $15,000 in consulting fees. We do it for free for brands, so they can get the benefit of these lower cost providers, but trusted and vetted providers as well.
Great. Oh, that sounds promising. Yeah. Good luck with that.
Thank you. So far, so good. But you guys know when you're building something, you're in the rut all the time. So it's fun, but there's plenty of ups and downs. So far, so good, though.
Good.
So Chris, what kind of opportunities are you looking for as an angel investor?
To be honest, not as many these days, just because of where I'm focusing my energy and building this. But the ones where people that I know and trust have done diligence, that is important for me, where I would write checks, but also more follow on. So for the companies that I've done successful with in investing, which successful is a funny word, but there hasn't been an event yet, but there's good momentum and they're headed towards that. Those are the ones I'm more just following on and de-risking those investments from where I sat, where I really rolled the dice when they were at an earlier stage.
Sounds like a good plan.
I think so, but if you ask me this question in 3 to 5 years, I might be, Leslie, remember that stupid comment I made a long time ago?
I'll check in 3 years, okay?
Yeah, isn't it Warren
But
Buffett
you'll
who
probably
always,
change it up depending on what's happening in the world, right?
Exactly.
Yeah. Sorry, Bonnie.
I was going to say, isn't it Warren Buffett who said that in down markets, that's when he starts investing, when everybody else runs. And the guy's done pretty well for himself.
Yeah, well, and that's when companies target a need, right? In a down
Yes.
market. Yeah.
Yeah.
Oh.
I'm
Another sector I'm interested in is cybersecurity. Any thoughts on opportunities in that area? Anybody? I mean, because there seems to be government mandates increasing for cybersecurity. Companies are being forced to be more careful, and that seems to me it should increase expenditures.
Yeah, I saw that chat GPT, and it is chat GP, was already hacked and they got all the paid users' information.
Yeah, well, that was inevitable, I think.
I know, but why don't these companies focus on cybersecurity? Don't you think that would be a priority? Don't you think that we've learned at this point, and it's never a priority?
Yeah, well, the government's trying to force it.
I was going to say that I don't know the space too well, but I know it from an operator standpoint, and they have some great business models on this. Like, it is the scare you from an operation standpoint, from a market as you would market to companies who have these to companies who provide these services. It's the scare you that your business can come to a grinding halt. And then it's the scare you to the customers that you can lose a lot of your data, which could impact your business. So like SOC 2 compliance, man, that is a racket. Like, it helps you become diligent. It helps you become efficient in how you're structuring your data, where you're storing it, who has access to it. But once you do that, and you have to be compliant with a lot of the big, especially if you're focused on enterprise or middle market, it's an annuity for them. Like, you have to have SOC 2 compliance if you're in a SaaS business model and selling to those size companies, because they need the security to know that you have that in place. And it's an annuity. Like, you'll do all the work up front, and then you don't have to do work anymore. And then you still have to write the same check every single year, every single quarter.
So that should be appealing to investors if they know
Yeah, and
kind of annuities are
built. For sure, there's been a huge influx of that. I don't think it's it is now, but in the last 5 years, you've seen that happen all over. Like, I haven't followed as much recently in the last year or two, but I know a lot of the founders who we shared space with, they're onto their Series C, D with tens of millions of dollars, if not hundreds of millions of dollars raised.
Next question or comment. Carrie, anything?
I'm in info gathering mode.
Oh, okay. Like, it is a funny time in the startup world. And like I said, I'm surprised because usually some of the best companies rise now at times like these, and investors seem very skittish. You know, I told you that startup I was working with, and I did take it to some very early stage VCs, and they wanted to see traction, and yet the angels saw it immediately and jumped right in immediately.
Well, yeah, I mean, it seems to me there's still a lot of dry powder, as they say, in different quarters, not necessarily in VC pockets, but certainly lots of other areas. There seems to still be lots of capital available. And occasionally you see an indication. You know, even Magic Leap raised another 400 million, I think, recently.
Did they?
Wow.
I did not know.
The Saudis. Yeah, from the Saudis, Saudi PIF. So even though they haven't made a dollar yet, as far as I know.
What does that put them at, 1.4 or 1.5 billion?
Yeah. Yeah, I think it's the biggest in history of any individual startup. But yeah, so, you know, it's certainly in the Gulf, there's lots of capital available. And, you know, they were involved in this Credit Suisse collapse, you know. Some Saudi minister made one comment, and the next thing you know, Credit Suisse was dead. So that's why I'm still concerned about the banking crisis. I mean, you know, some people say it's almost over, but I'm not so sure about that.
Yeah, we don't know about
you know. Yeah.
You know, I wanted to make a comment that has nothing to do with this, but you know, everybody's like, Twitter's going down, Twitter's failing, this and that. And you know, just but right before Musk came in, it's like Twitter was too big to fail. And all of a sudden, hello? Any comment on that? is anybody too big to fail? We see Facebook got rid of, Meta got rid of the metaverse, and don't know how Facebook is doing these days. Their new concentration is generative AI as well. They're jumping on that bandwagon. Any
But
comments, Chris, as an investor in oh, go ahead, anybody.
I mean, cost cutting is really still continuing at Facebook, right? I mean, more layoffs happening. And like they call it the year of efficiency, what is the term that Zuckerberg used. But yeah, I think the jury's still out on a lot of these social media, because like social media properties can turn on a dime, you know, like somebody acquires it or they make some kind of a change in, you know, the way they do things, and things can change overnight.
Yeah, evidently.
You know, talk sort of comes out of nowhere, and you know.
I mean,
okay.
I was going to say, Bonnie, is it the too big to fail? There's so many layers to that question.
Yeah, I know.
But you know, ultimately, there are certain businesses that provide economy and jobs for a broader amount of people that if they were to fail, then you're starting to say, hey, is the government doing their job with the right parameters or constraints? Are they providing the right guidelines, and are they letting a company that size with that many jobs fail? Because if they do fail and you're taking 40,000 jobs away from economy, where do they sit? And that tax comes back to, that impact comes back to the government and how they're providing employment or unemployment. And then it eventually comes back to our taxes. So too big to fail is a real thing, and there's no way of understanding that, but looking at past instances where the government has stepped in, and just recently, I think that might be an indication of what the government is tolerable of, knowing that if they did let it fail and let markets do what they're doing, we'd be in a different type of economy right now.
Anybody else have a comment?
Yeah, I mean, the Silicon Valley bailout is kind of a proof of that point. You know, I mean, massive amount of funds, although supposedly not government money.
And when companies know that, like financial crisis 2008, like when they know that, look, the Dodd-Frank alleviation they did, whatever, 2-3 years ago, I remember reading about. After that, when there wasn't a cap on, the cap was raised on different size banks, all these banks now quadrupled, 10x the size of their business. And they did that by taking higher risk and going after developing new products or other services to do that. And then that's where we sit now, because they didn't anticipate a rise in interest rates.
Yeah. So there's, you know, seems to me a lot of risk still around.
From where we sit, sure. But from a big bank's point of view, if you know you've got someone there as your fallback.
Yep.
There's no risk.
Except to the taxpayers.
Right. And no White House, the acting White House is going to let that happen, right?
Yeah, that's right.
So, anybody else?
Wonderful. Just thank you so much. I've learned so much.
So, Chris, any parting words of advice as a serial founder who's going through it again? Don't know why, but here we are.
I was just laughing last night talking to a bunch of friends. It's like, if you have the itch, it'll always be there. Like, if that itch is always there, even if you build something, you exit, you have an event, like, if the itch is there, you know it'll always be there. So if you're self-aware of that, just make sure you have fun and you're focused on something that you enjoy, that can give you a potential sense of fulfillment or accomplishment. If not, then go jump back into working for the, big corporation or small business, and you can enjoy more of a simplistic, less stressful life. But if you have the itch, just embrace the itch.
Scratch that itch. Yep.
Thanks, Chris.
So any last comments or words of advice? And thank you for those words of advice. I know sometimes I always call it fire in the belly.
That's a good one. That's another t-shirt right there. We got to embrace the itch and then fire in the belly.
It's like it becomes your whole life.
Yeah.
So I thank you, and I thank everybody, and still jealous that you're down in Florida in the nice weather. It's still cold up here, Chris, but I don't blame you for being there, and good on you. And thank you, everybody else, wherever you are.
So much.
Awesome.
Yeah,
Thanks,
great.
Bonnie and Joseph, for hosting. Much appreciated for the invite. Always enjoy it.
Okay, thank you. And I will do that introduction. Thank you, everybody.
Take care.
Have a good day,
Thank you.
everyone.
Bye.
Bye.
See you.